course, it continues to be a tough time for the entire industry. You're fairly optimistic, saying that you think almost all international travel and flights will resume by the end of October this year. For that to happen, a lot of things have to fall into place. Hotel quarantine, these vaccine passports. Are you optimistic that this is actually going to happen?
Yeah, well, we are. We're optimistic in a couple of different ways, Heidi. First of all, in domestic, which we have a very big domestic market that's unique in the aviation industry. And we've seen this progression through this financial year. In our first quarter, we only had 20% of domestic schedules operating. Second quarter, we got to 40%. We're currently in the third quarter, we're at 60%, and we're expecting to get to 40% of the last quarter. And we're hoping with the vaccine rollout here in Australia, and with certainty being brought to domestic borders, we could potentially get to 100% faster if we could bring that certainty. And then with international, we're seeing the vaccination rolled out with the adult population being complete by the end of October. We should be out of a position where we get the herd immunity in Australia. We've had to pick a date. The government still have to make the decision. It's a government call here in Australia about when they do it. But the government has talked about in the past either a vaccination requirement to enter and leave the country or hotel quarantine. We know hotel quarantine depresses the demand significantly. So we are assuming to give our people some certainty and to start planning for the start of international operation that the end of October it is feasible. We're only talking about getting back 40% of our international capacity outside of New Zealand for the financial year 2022. So it's not everything back on day one, but we think that's a valid and maybe even in some ways a conservative assumption. But if it's optimistic, we can delay it and push it out. If it's conservative, we can bring it forward. But it's there to give our people some certainty and allow them to plan with secondary unemployment and allow them to take other opportunities while the border's closed.
Alan, given the state of the balance sheet and given a lot of the caveats, including that staggered, restarting of international travel and flights, are we going to see airfares unusually high at the beginning to help the company recover?
No, I think absolutely the opposite. I think our incentive is to get as many people to fly as possible and to cover cash costs. So what we're saying for the fourth quarter is that we start repairing the balance sheet just on domestic. We don't need international to have restarted. In fact, because of freight doing so well, which is a bit of a hedge on international, because freight with no passenger aircraft flying, the yields on freight have gone up. Freight's only burning $5 million a week. International is only burning $5 million a week, so it's very low. And domestic is generating positive cash flows. So we think in the fourth quarter we'll start repairing the balance sheet. We already have, going into this, one of the strongest balance sheets of any airline. We're one of only 8 investment-grade airlines in the world. Moody's have reconfirmed our rating. We have a target about what we need to do between now and 22, which we think we will do with the optimism on borders in order to repay debt and get our debt levels down. But we're in a very good position, and relative to other airlines around the world, we have one of the strongest balance sheets.
Does that mean that perhaps you could also be taking a look at those long-haul flights? We're talking about Project Sunrise, right? If you're expecting more pent-up demand, could we see that perhaps being brought forth?
So we've said we need to see what the recovery looks like, how demand actually returns. I think IATA is forecasting that international demand won't get back to 19 levels until 24. But we are still very keen on Sunrise. We think the business case is probably stronger than it was before COVID. People will probably want to fly direct to destinations out of Australia rather than stopping off. We won't revisit it until the end of 2021, and the earliest you could take aircraft is now probably 24 onwards. But we still think it's a great opportunity. If we see the balance sheet being repaired, that's our #1 priority. and we see the ability for us to do Sunrise within that environment, which I think there could be a good case that we'll be able to do that, then we're still very keen on operating Sunrise and implementing Sunrise.
Give us a little bit more insight into the restructuring that's happening right now at Qantas. You talk about repairing the balance sheet. What are your priorities at the moment? We've heard about job cuts and other cost cuts as well.
Yeah, we have a $1 billion transformation or recovery programme that will deliver on 600 million sustainable ongoing benefits this year. That grows to 800 million next year and $1 billion in the third year. Unfortunately, in order to achieve that, and because of the demand issues on international for a few years, we've made 8,500 people redundant in the group. That's nearly 1/3 of our workforce. We've changed things like ground handling, where we've gone to an outsourced provider because the outsourcing benefits are 40% better than doing it in-house, and a significant capital savings by getting them to use the equipment. We've seen huge technology savings through doing technology different. We've seen big head office savings by reducing our head office staff by 30%. And we've seen the way we do engineering becoming more efficient. We had 3 engineering bases here in Sydney, which were collapsing into 1 as a consequence of this. So we think the $1 billion is absolutely achievable. We're on track to do it, similar to our transformation programme in 2013, where we over-delivered, and that allows us to have a steep recovery in the balance sheet as the demand recovers and as the borders reopen.
How much more fundraising do you think you'll need to do to be able to ride the rest of this journey out?
Well, we have really strong liquidity today, so we have $4.2 billion in cash or a revolver cash equivalents. As we said, we believe we're going to be cash flow positive in the fourth quarter and repairing the balance sheet, so that liquidity is enough to get us through multiple years, even if things weren't to improve. And we have $2.5 billion in unencumbered assets, land and aircraft, so we don't have a liquidity issue. We have plenty of liquidity to last a very, very long time. So we're very comfortable in our position as it stands today.
So you announced the last 3-year turnaround plan middle of last year. I think that was when we had spoken to you. Are you feeling more optimistic, less optimistic? Has it sort of played out the way that you expected? We talked about sort of worst case scenarios at that point. Do you think that's well and truly played out for the airline?
Yeah, so I'm absolutely more optimistic. We're still, in the middle of the biggest crisis that's hit aviation, but we are seeing this recovery. As I mentioned, the domestic market is coming back. We're seeing really strong pent-up demand. The Australian economy has done really well through this because of how we've handled COVID. So we're seeing huge growth in parts of the economy. We've seen the resource sector, which is a big part of our domestic business, booming. We've seen our competition go into administration, come out a lot smaller, which has given us the ability to get to 70% market share in the domestic market, a market that we were really strong before COVID, and post-COVID we're going to be even stronger. We've taken the ability to restructure our international business so it comes out of this stronger when international travel recovers. And we still have these amazing assets like Qantas Loyalty, which even with the airline grounded, generated $450 million of cash. People are still really keen on generating points. And we have our freight business booming. So we're in a relatively great position compared to any other airline around the globe, and a lot better position to take opportunities as we get out of this. So I'm a lot more optimistic than I was a year ago.
What about down the line, especially given the macro environment when you have rising oil prices? And I know that we're perhaps far from there, but we have even heard people talk about $100 oil already.
I don't think anybody can pick oil. I mean, it's at 60. People have talked about it going to 100 before. We have a very different environment, I think, coming out of COVID. We'll have world aviation, apart from maybe carriers like Qantas, that will have significant reductions in capacity for some time. We'll have a lot of airlines going bankrupt. I think it's the forecast from people like Kappa. And we'll have probably some economies around the globe that will still be recovering from COVID-19. So I think you'll have half of the forecasters of oil saying it could be higher, half saying it could be lower. I think what airlines have shown in the past that they can cope with a variety of different oil prices as long as we see the demand there. And I think for us, we're definitely, at least domestically, seeing strong demand going forward, and internationally we'll keep capacity parked if we don't see the demand there for them in the future.
Alan, you've said before that getting smaller isn't going to ensure survival post-COVID, right? And you've also talked about getting market share from Virgin Australia when things properly restart again. What does the sort of right-sized Qantas look like on the other side of this? What's going to be your priority when it comes to strategic spending?
Yeah, so the domestic market is our top priority. Qantas is exceptionally strong here, and we're seeing huge growth in certain parts of that market. We've been putting aircraft into Western Australia because of the resource boom. We've been adding aircraft to our charter operator, Network Aviation. We've added 9 aircraft in the last year while COVID was going on. We're going to add a few more by the end of next year, and there's huge growth in that business. We've seen our domestic market share grow. We see Jetstar as having huge opportunities with the pent-up leisure demand in the domestic market. And we're seeing our loyalty program still launch new businesses and new partners, and that has huge growth. So we think by 2024 we could be making an 18% margin in Qantas domestic. We could be making a 22% margin in Jetstar domestic. We'll have international returning its cost of capital. We'll have our loyalty business making between $400 and $600 million. And the group will be in a great position if we can achieve those targets. And that's what we're focusing in on. So the group could be bigger than it is today. We went through a similar restructure in 2013. We unfortunately had to make 5,000 people redundant. Within a few years, we were making multiple billions of dollars of profits, and we recruited all those people back in different jobs. And I've no doubt, with the plan we have in place, that over the next few years we can recover the group back to where it was pre-COVID.